Hello and welcome to a brand new edition of Smart Money. This is a part of our Outstanding Women in Finance series, and joining us now for this Outstanding in Women Finance series is Jyotsna Singh, the Senior Executive Director at Kotak Private Banking. She has been with Kotak for over 25 years and her career is spanning over several verticals like asset management, insurance, corporate banking, real estate and investment banking. Jyotsna, thank you so much for being with us here. And, this is a very special series that I've started, Outstanding Women in Finance, because I feel like this is a very competitive environment and women who have perhaps sustained through the course of decades, they need to be celebrated. So here we are celebrating these women. But tell us a little bit about your own journey. I mean, you've been with Kotak for 25 years now. How has it been?
Let me start by thanking you, Sonia. It's always a pleasure to be back here with you. Yes, a proud Kotak Lifer of 25 plus years. I would say it's been an amazing journey. And of course, it's been a very different one because I really didn't feel the need to change jobs or move out of the organization, in the pursuit of growth, which is something I guess we all see, which is quite rampant, across the industry today. I guess I was also fortunate that I joined the group when it was still in its nascent stages, and the group was growing and expanding, and one just got a lot of opportunities in terms of dabbling across various businesses, and that's exactly what I did. I'd say multi-product, multi-locational, in fact, bond trading to investment banking, asset management to corporate banking, and more recently real estate to now private banking. So in many ways, I guess I have busted many myths or many stereotypes that, once an investment banker, always an investment banker, or once a corporate banker, always a corporate banker. So having said that, for me personally, what I felt is that this journey, which has been, I've actually cut across wholesale as well as retail businesses, and therefore it's been very varied, the experience, and I think personally it's been very enriching because it's given me a far more holistic and a well-rounded perspective of financial services. And I think in today's day and age, all of this versatility does add to longevity, and like I said, it's been an amazing journey and I've loved every moment of it.
I just wanted to get in there because this is this is actually a great time to be in financial services if you're a woman as well, right? I don't know if there are still any gender biases left. It's 2022, so a lot of that has been taken out. But in your long journey, have you faced those gender biases? Have there been issues like sort of gender pay gap and all of that? And how have you overcome it?
Let's just start by saying that, women today are taking the lead in pretty much every sphere, and financial services is no exception. And yes, they are scaling new heights. In fact, I want to say that, the role that women have played in the India growth story is in fact, a very significant and dynamic shift that we've seen, economic shift, if I may say so, that we've actually seen play out in the last few decades. Having said that, when you talked about gender biases, etc., there's a recent a World Economic Forum Global Gender Gap report that got released in 2021. And that unfortunately sort of shows India having dropped some 28 odd positions.
Yeah, it's a very low ranking.
Yeah, it's 140 out of 156 countries. So obviously, in fact, the gap has widened in the last few years, to about, they say 62.5%. So I think that is a little disturbing. And I think closer home, if you really look at some of the data that's got published by the National Sample Survey Office, so I'm not saying this is the data that's sort of come in from there. In 93, 94, women used to earn a whopping 48% less than their male counterparts. Okay. And this shrunk to about 28% as recently as 2018 and 19. But again, in the last few years, initial data seeming to suggest that this has grown by about 7%. And while we're sort of sharing data, I think even if you look at, say, celebrities, etc., who are fairly well-spoken, well-covered, etc., gender disparity, pay disparity is something they've always talked about.
Exists everywhere,
yeah,
yes.
So it's sort of, nothing new. And in the BFSI sector, since you asked about, closer to the heart, I want to say things are definitely much better. I feel there's a lot of participation of women in the sector. But again, unfortunately, we normally tend to look at, women who are more in the limelight or, just around us. But if you really look at it at a sector level, pan-India, there is data, and I think it was published in the ET a few years ago, so it's slightly dated, but there was a sort of clear messaging that women got about, the male counterparts typically got 1.27 times more than the women, even in the BFSI sector. And because of what we've seen in the pandemic and the great resignation year of 2021, etc., I won't be surprised if those numbers have, widened a little bit.
Okay.
So it kind of does exist to some extent, much as we'd like to believe that it doesn't.
It doesn't.
But I'm, very happy to say that, at Kotak Private Banking, we have 40% women, and I don't think any one of us have any of those issues. So
okay, that's great.
Yeah.
I mean, kudos to you guys. And I'm glad that the dialogue has at least started, right, across corporate India about reducing the gender pay gap, as well as, just being a little more gender equal across organizations. But coming back to investments, tell us, I mean, you have, as we were telling you, right, your career has spanned across verticals, whether it's investment banking, corporate banking. In your own personal journey, Jyotsna, what has been your biggest, perhaps, investment lesson? What is the biggest mistake that you made that you'd want to avoid? Because a lot of young people are watching our show. Sure. What would your advice be to them?
Many lessons, and I'd say still learning, because one should never and can never say that you've learnt it all, because life doesn't stop teaching you. Having said that, I would say a couple of key pointers. One, of course, is SIP. And in an SIP here, I'm not referring to, what normally people associate it, but I'd say stay invested patiently. There's a very interesting read called, Leo Tolstoy has written this book way back in the 1860s. It's a masterpiece called War and Peace. And over there, he'd made a very profound observation way back then, saying that the strongest warriors of them all are time and patience. Now, I have no manner of doubt that he was saying this, from clearly a perspective of war and a military perspective. But I think today, 150 plus years later, this perspective really sort of holds true for the field of investments. And I think it's a very, very pertinent and important perspective, and we should not sort of lose sight of it. So while you're busy SIP, sipping your sort of,
investments.
Your investments, I'd say pay limited attention to the headlines. And what do I mean by that? I'm not saying be aloof and sort of be ignorant of what's happening around you, but there's a lot of noise, and there's a lot, so you have to learn to sort of cut out the noise and focus on what is in it for you, why are you in it, or how long are you in it for. And typically people plan investments at least from a medium to long-term perspective, and therefore you must cut out the noise. Let me just sort of say that when I started my career, I think the first thing that hit me pretty much on day one of my career, if it was not week one, was the Harshad Mehta scam. And then of course one thing led to another. We saw the Asian currency crisis, we saw the Kargil war, we saw the dot-com bubble, we saw the Twin Towers, this thing, and I would say more recently and closer to home, we've seen demonetization. We saw, of course, the global financial crisis. We've seen COVID, which was an unknown, and of course now the Ukraine-Russia war. And, I could go on and on, but the point I'm trying to make is that these events, sometimes you call them a black swan, COVID probably was one such thing, and so on and so forth, will keep happening. I mean, if I just say 25, 30 years of working and maybe 15 odd such events, one every 2 years. So stuff like this is likely to happen. But like I said, stay clued as to what's happening, but don't let it, bother you beyond the point. Stay the course would be my messaging. So clearly do that.
Okay, stay the course is your messaging. All right, we do want more investment lessons from you, but we need to take a short commercial break. Sure. So we'll do that, take a quick commercial break and be right back on Smart Money. Don't go anywhere. Welcome back. You're still watching Smart Money on CNBC-TV18, and this is a part of our Outstanding Women in Finance series where we're profiling women who have done their bit and have achieved it all in their arena. Today, of course, we have Jyotsna Singh of Kotak Private Wealth with us. Jyotsna, you were telling us before the break about how your investment mistakes or, your investment lessons, right? Yeah. You told us you need to stay invested, you need to stay patient, and that's the most important thing. What else? What else would you advise our viewer today?
So, another important thing to keep in mind really is know your own world. And, let me just sort of remind you of that famous story that we've all heard of when we were probably growing up about, Ganeshji getting into a race with his brother Kartike. And, they decided to have this race, and his brother, of course, went around the world 3 times, and Ganeshji just went around his parents 3 times and won the race. I think the clear messaging from that is know your world, know your goals, know your risk appetite, know your gumption to, to stomach risk, etc. And don't get bothered by what people are doing around you. I think somewhere we get really smitten by what others are doing around it. So don't worry about the Joneses. Stay focused and once again, just sort of stay the course. And then, of course, you don't have to really burn your, or touch the fire to sort of feel the heat, as they say, because just keep observing what others are doing, learn from their mistakes, sometimes see what they're doing, sometimes see what they're not doing, and don't be in a rush to sort of jump onto the bandwagon, etc. And clearly, no FOMO. And that's something that we've really seen a lot of happening of late. So I think that's something we should be careful about.
Okay.
Just if I could sum up and say that one of the most important things, if you ask me, is the quality that you should have when you're, wanting to do investments. And more than intellect, I would say it is the temperament. Have a calm temperament, just stay cool about it. Ups and downs are, bound to come. That's the reality of the markets. But just hang in there and stay focused.
I'm very interested to know what is your own investment style, because, this is a very dynamic market. It's hard to find sectors which stay the course, right? I mean, because of disruption, digitization, things are changing on the go. What is your investment style and how are you approaching the markets now?
Well, my own personal style is, I'd say, very vanilla. Now, I know that, vanilla is often misunderstood or understood to be plain, simple, boring, very rightly said, right? Maybe very safe and unexciting. But since you mentioned boring, let me just say that, to quote an ice cream expert on the word vanilla, he said it's a stunningly sort of complex and subtle spice. In fact, it's one of the most expensive, I think the second most expensive. But anyway, coming back to investments, for me, the vanilla part of investment, is sticking to the approach of asset allocation. I think that is really the cornerstone, and I'm a huge believer in it. And interestingly enough, and more studies have been done that demonstrate that over long periods of time, when you look at what has contributed to portfolio performance or portfolio returns, more than 90% plus has actually come in because of just sticking to the discipline of asset allocation. Now, asset allocation, as the name suggests, is no rocket science. It's about just sticking to how you want to diversify across various asset classes. Having said that, however simple and however vanilla this might sound, the reality is, and I can also speak for myself, it's really difficult to actually adhere to it in a disciplined fashion. Sometimes it's just lack of time. Sometimes it's you just get a little emotional about, I bought something, and all sorts of, colorings come into your judgment. And that is why.
Let me ask you this. Sorry to interrupt, but I want to ask you, when you talk about vanilla, right? What is the basic fundamental of your investment journey? Do you prefer buying, say, just going with large cap basket buying in terms of stocks? Do you prefer putting all your money in ETFs, index funds? Do you, like a little more aggression with mutual funds? Because we do know that at the end of the day, mutual fund managers, they have not outperformed the index funds, right? They haven't outperformed the benchmark. I mean, that's the truth. So how are you approaching it?
I think it's a very pertinent question you've asked, and that is why I was saying that when you stick to asset allocation, once you're clear on that, and asset allocation could depend on one's own age, goals, risk appetite. I keep harping on risk appetite because, again, yours could be absolutely different from mine. But having said that, one can either do that by one's own self in terms of constructing the portfolio. But these days, there are very interesting platforms that are available. And again, I'm a huge believer in using those platforms where they're actually asset allocators for you. So once you give them your risk profile, they will go ahead and do, once they know, for example, that if you're an aggressive investor, they could do an 80-20 for you, etc. And then they will decide whether how much should go into active, how much should go into passive. You talked about ETFs, which would be, in the passive part of it. How much should really go into large caps, how much should go into... So it's all taken care of. And the beauty is that very often we don't stick to asset allocation or the discipline because, like I said, time constraints, we get a little, emotional about stocks. Whereas here it's done as a process, that's their bread and butter living, and it's very clinical. So I would, I'm a big believer in going to the platforms and allowing them to do it for you. And I know many people would say, oh my God, you're a finance professional doing it yourself. But it's true, professionals don't have that much time to
do it themselves.
Yeah. And of course,
I understand. I feel the same, exactly the same. I mean, you can leave it to the professionals who do it daily, right? Why do you have to do it when you have other things on your plate? Let's talk a little bit about your lessons, right? Because you have had a career of over 35 years. I'm sure you've met a lot of stakeholders of the industry, whether it's market guys, corporates, and I'm sure you had some mentors, some role models as well. Who has your role model been, Jyotsna, and what is your biggest learning from them?
There are many investment gurus and of course, domain experts that one has learned from a lot. Many colleagues in the industry and within the workplace that one has gained immense insights from. But since you specifically asked from an investment perspective, I would say for me, personally, someone that has done both wealth creation and more would be a sort of a role model. And for me, that would be the House of Tatas. Because, someone who's actually been in the real economy and has managed to touch the lives of so many people, the kind of job creation that's happened, the kind of impact they've had on society, the kind of reforms that have come in because of them, whether it's land reforms, whether it's labor reforms and social reforms, etc. They have made such a deep impact, and at the same time, they have generated wealth. So I think it's a win-win. Somewhere there is this debate that happens even when you talk about sustainability, etc., that can businesses be profitable if you need to be sustainable? And I think the two are absolutely interlinked. And, the Tatas are such an awesome group to look up to and see it. And if also, if you look at the numbers in terms of how their stocks have done and you compare it, there's enough and more data again out there, but about a 26 year analysis comparing some stocks across Germany, Japan, US, leading countries, and then of course, Warren Buffett's own Hathaway enterprise, and then the Tatas, the numbers clearly stack up in favor of the Tatas over longer periods of time.
That's great. Okay.
So, point being, they've done well financially, that basket of Tata companies, and yet they've done so much good for society. So my vote would go to them.
Okay, your vote would go to them. We have just a couple of minutes left. So let me ask you, for a viewer who's, perhaps watching you right now, looking for their own investments and to grow their corpus. You spoke about being patient and, investing in this market, being consistent with your investments. Sure. In terms of asset allocation, do you believe that for someone who's young, say between their 20s and 30s, does it make sense to diversify outside equities? Because this is a time where interest rates are also on the rise. In fixed income, there's a lot of interest now in fixed income. Your views there. What about gold, other asset classes at a time when perhaps there's a recession looming in the US? Your thoughts?
So, when people look at asset allocation, and so let me again sort of look at it from my own personal lens, equities is clearly something that, most youngsters, and I also started pretty young as far as equities went. But I didn't sort of ever give up on fixed income because, the kind of comfort or the little bit of safety pot that one wants to create can be created quite easily and conveniently through fixed income. So I don't think I was ever 100% equities and zero debt. I always had something in fixed income. And I want to say that ratio has changed over the years, but very consciously. You're talking about equities and fixed income. Another very interesting asset class that has come up is that of alternates. And therefore, if you look at, say, things like REITs, or you look at, you mentioned gold, it could just be, any other real estate that one is looking at, hedge funds, long shorts, all of that has also become a very interesting class. But again, while we typically talk about age, etc., and risk-taking ability, the truth is, and the honest truth is, that when people do their risk profiling, they might think that they're very aggressive, but very often they do not have the ability to stomach volatility. Okay. So I don't want to do any stereotyping here that, in your younger ages, you should do this and you should not do that. I think it is different strokes for different folks, and no one's sitting on a seat of judgment. But yes, very often equities, just because by its very nature one likes to invest for a slightly longer term perspective, the earlier you get in, the better. And might I just add, we should not forget what Einstein has taught us, and that is the power of compounding. And he calls it the 8th wonder of the world. And I may have said this on your show earlier, but I truly believe in it, that, those who believe in it benefit from it, they earn it, and those who don't pay it. So just remember the power of compounding, and it only comes into play over longer periods of time.
Okay, on that wise note and on those pearls of wisdom, we will let you go. Thanks a lot for joining us, and all the best. You've had a great journey so far, and hope you continue to reach new heights. Thanks a lot, Jyotsna, for being with us on Smart Money.
Thank you, Sonia. It's been a pleasure.
Well, with that, it's curtains down on another edition of Smart Money. Thanks a lot for watching.